When we talk about power, we picture presidents, generals, or tech billionaires. But the most powerful force shaping our lives isn't an army, a government, or even a corporation. It's something older, quieter, and infinitely more persistent. For centuries, banks have quietly expanded their reach, transforming from dusty counting houses into global empires that influence everything from wars to wages, from inflation to elections. This is the story of how the world's real rulers don't wear crowns or win votes. They lend, they create, and they control money itself. The birth of banking power. It began in the temples of ancient Mesopotamia, thousands of years before the first coins were struck. Priests stored grain for farmers and recorded loans on clay tablets. In return, they demanded interest, the first seeds of modern banking. Fast forward to medieval Europe, goldsmiths who stored coins and valuables for nobles realized something extraordinary. Not everyone withdrew their gold at once, so they began issuing paper receipts instead of the real thing. Those receipts started circulating as money themselves, and that's where the Quiet Revolution began. For the first time, money existed beyond metal. It existed because people trusted paper and the men who printed it. Goldsmiths became bankers, and banking became the most profitable and dangerous idea in human history. When kings became borrowers, as kingdoms grew, so did their hunger for war, and wars required financing. Enter the bankers. In Renaissance Italy, the Medici family turned lending into an empire. They financed popes, kings, and entire crusades. Their wealth bought influence far beyond the battlefield. If a ruler failed to repay them, they could cut off credit and the crown itself could crumble. In 16th century Europe, the Fugger family in Germany funded emperors and bought political loyalty. They didn't need armies, they owned debt. The lesson was clear. He who controls credit controls power. And the kings who borrowed were no longer sovereign, they were servants to interest. The British Banking Revolution. The real turning point came in 1694. England broke after years of war with France, struck a desperate deal with a group of private financiers in exchange for a massive loan. The lenders were granted an extraordinary privilege. They could create new money by issuing notes backed by the government's debt. Thus was born the Bank of England, a private entity with public authority. It could lend to the crown, issue currency, and collect interest, effectively controlling the financial lifeblood of the nation. The model worked so well it spread across Europe and beyond. Britain's empire was built not only on ships and colonies, but on credit. Wars were fought on borrowed money. Trade flowed through loans, and every new debt made the bankers richer and the government more dependent. By the 19th century, the phrase "the sun never sets on the British Empire" had a hidden meaning because the interest on British debt never stopped accumulating. America's turn across the Atlantic. The young United States was born in rebellion against taxation and royal control. Yet, within decades, it fell into the same financial trap. Early American leaders were divided. Thomas Jefferson warned that banks were more dangerous than standing armies. Alexander Hamilton, on the other hand, saw debt as a source of strength. Way to unify the states under one financial system. Hamilton's vision won. The first Bank of the United States was established in 1791, modeled after the Bank of England. From that moment on, America's independence came with an invisible chain national debt. But the real power shift came in 1913, when the Federal Reserve System was created, a central bank privately owned by member banks. But with the authority of the government behind it, it could expand the money supply, set interest rates, and lend to the U.S. Treasury just like the Bank of England centuries before. Most people don't realize this. The U.S. dollar is not issued directly by the government into existence when someone somewhere takes out a loan. The Federal Reserve doesn't print wealth. It creates credit and you pay it back with interest. The global web of control. After World War II, the old empires collapsed, but a new one rose. Instead of colonies, this empire ruled through currencies, interest rates, and international debt. At the center stood the U.S. dollar, the new global standard. Every major economy needed it for trade, and the institutions that controlled it, the Federal Reserve. The IMF and the World Bank held the keys to global finance. When countries in Latin America or Africa borrowed from these institutions, they didn't just owe money, they owed obedience. Structural reforms, privatization, and austerity policies often followed decisions that reshaped entire nations. By the late 20th century, the map of global power looked nothing like the one in school textbooks. Borders mattered less than balance sheets, and the most influential people in the world weren't politicians or generals. They were central bankers. The age of digital money. Today, the story continues only faster. Money no longer jingles in pockets or stacks in vaults. It moves through data centers, fiber optic cables, and algorithms. Central banks can create trillions of dollars with a few keystrokes. Commercial banks multiply it through loans. And now the rise of digital currencies and central bank digital money threatens to give them total control, not just over your savings, but over how and where you can spend it. Every transaction recorded, every purchase tracked, every citizen financially visible. This is the final evolution of an empire that began in the temples of Mesopotamia, a system where money itself is power, and those who control it need no throne, no flag, no army. They've already won. By the 19th century, banks had evolved from merchants, back offices, into powerful institutions that could command entire nations. The Rothschilds, the Barings, and the Morgans, these were not just families. They were financial dynasties that shaped the destiny of countries and kings. When governments ran out of gold to fund their wars, they turned to these bankers. In return, the bankers didn't just earn interest, they demanded influence. Influence over policy, influence over trade, influence over the very soul of the economy. During the Napoleonic Wars, for example, Nathan Rothschild didn't fight with weapons, he fought with information. He knew before anyone else that Napoleon had been defeated at Waterloo. That tiny head start on news gave him the power to manipulate the British stock market and solidify his family's place as one of the wealthiest in Europe. From that moment on, the real battlefield was no longer on land or sea, it was in the financial markets. The Industrial Revolution accelerated. Banks found a new playground. Industry financed factories, railroads, and steamships. They built bridges, tunnels, and cities. And for every innovation, humanity celebrated. A banker somewhere quietly smiled because behind every leap forward, in America, men like J.P. Morgan became symbols of unstoppable capital. When the U.S. Treasury ran out of gold during the Panic of 1895, it wasn't the government that saved the nation. It was J.P. Morgan, using his personal connections to private banker, bailed out the world's richest government. Think about that. That moment marked a shift in power that most people never noticed. The government, the supposed seat of authority, was now financially dependent on the same institutions it was meant to regulate. The birth of modern monetary power. Then came 1930, and the year everything changed forever. The creation of the Federal Reserve System in the United States was sold as a way to stabilize the economy and prevent crises. In reality, it handed the power to control money itself to a private network of banks operating under the banner of public trust. It's a system so complex, so deeply woven into daily life, that even most economists can't fully explain who owns what or who benefits most. But make no mistake, this was the moment banks became the architects of nations. From that point onward, wars weren't just fought with armies, they were financed into existence. World War I, World War II, every massive conflict since, behind the politicians and generals stood the lenders. Every bullet fired, every ship built, every soldier paid was funded through debt. And when the war ended, the victors didn't just take territory, they took interest. Post-war expansion, the global bank. After World War II, the global financial map was redrawn. The U.S. dollar replaced gold as the world's reserve currency. The Bretton Woods Agreement tied global trade to the American banking system. From that moment on, if you wanted to trade internationally, you had to pass through the U.S. dollar and the American banks. This wasn't colonization by armies anymore. It was colonization by credit. And with the creation of the World Bank and the International Monetary Fund, the system became global. Developing nations desperate for reconstruction funds took massive loans that came with hidden conditions. Conditions that dictated how they could spend, what industries they could develop, even who they could trade with. And if they couldn't pay back, their national assets, sports, oil, land fell into foreign hands.